Good morning, traders. Welcome. FollowMeTrades.com, Real Traders Club live session, Thursday, October 26, 2023. Good morning to you. Good morning, and everybody else. We continue with the Magnificent Seven reporting earnings and some economic reports. Getting some big stuff out of the way here. So let's go ahead and refresh this page, make sure we got the latest reading. So Dow is down 0.21%, S&P 0.6 down, NASDAQ 0.97, officially in correction territory, meaning down 10% from its highs back in July. There's a picture of Mark Zuckerberg, and Meta reported beat on earnings and revenue, but weak forecast said things are definitely softening. This headline says they made some cautionary commentary about unrest in the Middle East. The forecast that, hey, we see ad spend slowing down. They spent, well, I think it was $3.8 billion in loss in their R&D Toys for Engineers lab. That's a big burn rate, right? That was a concern before. They kind of reined it in, and it looks like they're back on track to spend a lot of money on R&D and not really yielding anything yet. Here's the other thing. The U.S. GDP grew faster than expected. And, what does that mean? Seems like, hey, that's good news, right? The U.S. economy not in recession. Everybody had forecasted that it would be at this point. But the U.S. GDP was forecasted to come in at 4.5 quarter over quarter, came in at 4.9. So if you read the articles, some of the analysis on that, it is being driven primarily by the consumer, as well as some government spending. Better than expected, but what does that also mean? We want the economy to grow, not, to expand, not to contract, but that certainly is on the Fed's radar. The speculation would be that the Fed thinks, hey, the economy's growing, inflation's still high, we've got to slow that down to get to our 2% inflation target, which we are a long way from. And Shiv says job numbers were down. The other thing, if you dig into some of the articles, so household savings ratio is down dramatically and credit card expenditures are up dramatically. This expansion in the economy driven by the consumer looks like it could run out of gas, right? You can only, draw your savings down to zero, and at some point you max out your credit cards, and now that becomes a drag as you got to make payments on those and pay 22% interest on that. Although it seems like a good headline number, there's some concern about that. Could mean higher interest rates. It could run out, and then the student loan payments are kicking in, and that's expected to have 1 to 1.5% impact on GDP as people got to spend money on their student loan repayments versus buying stuff. So there we have, the mixed picture, right? And the major indexes all down. Let's go look at the chart. S&P 500 down through the 200, convincingly. And, what's the next support level? Well, it's down here, right at about 380 on the SPY. That's a long ways away. And, is Santa going to come to the rescue? Or are we going to have the typical end of year rally? Something's going to have to change. And it didn't come from earnings, right? We got the Fed up in mid next week, less than a week. So we'll see what they do with rates. All right. So that's a quick look. But with everything being down, there is something that is up, and that is long trade on company formerly known as Florida Power. Now,
Dean,
it's gapped up, or it's up 2.74%. So good for us, right? That is in profit. It's a nice trade so far. And the reward to risk on it is still favorable, so you can still get into that. And I'm getting the internet connection warning. Can you guys hear me okay? Did I drop out?
Yes, just for a little bit. If you want to summarize it quickly.
We're winning. It's in
Okay. That's a good way to summarize it.
And it's still got favorable reward to risk for anybody who's not in it and thinking about getting in for now. So good trade so far. Did you log in time to